Well, it's a good question. I think we have to get used to politics becoming a bigger part of markets. We are in a different world to the one we've been in for quite a long period, and political intervention, more extreme politics is becoming more of a factor of life. Having said that, I think it's really important not to get too focused on politics. We do have to look at the individual companies we're investing in. We have to be aware of the political environment, but we don't want to get carried away by that. And very often that can create opportunities. Companies going to get oversold or sometimes get to too high a price because of political themes, and that can give opportunities for active investors. We're probably finding value in three areas at the moment, two of which we've seen for a long time. So some of the mega cap companies of bigger stocks like Royal Dutch Shell, BP, GlaxoSmithKline are still at really good value to us despite the fact that they've had a better year this year. The second area are some of the recovery situations. The market hates uncertainty. So companies where the prospects in the short term are difficult or challenged, where the company is restructuring and turning around, often you can get those companies at really quite attractive valuations if on a medium term basis, because in the short term there's uncertainty. And the third area, which is relatively new, is particularly we've seen a sell-off in many of the defensive areas, and some of the utilities and telecom companies are looking much cheaper than they have done for a while. So we're finding more opportunities there than we have done for a year or two. Yeah, we've been steadily increasing our mid-cap weighting over the years, and I think it's really reflecting where the opportunities are. So the FTSE 100, the large index of large stocks, is quite concentrated, particularly if you're buying higher income, high dividend shares, and therefore it's sort of natural to look further afield across the whole of the mid-cap area, even into some of the smaller companies, to find different opportunities. And so it's been a very gradual process as we've looked to diversify the portfolio and broaden it away from the large companies. We've gradually built up the mid-cap weighting. Yeah, we look to buy companies that have good dividend yield. But it's very important to state that although we are buying high-yielding shares, and historically that's been a good place to invest, we never let the dividend itself become the driving decision. We're always looking at companies we think can make a good total return, as well as having an attractive dividend yield. So we don't automatically sell a company if the share price goes up and the dividend yield drops below any particular level. We're more pragmatic than that, but we do look to buy companies with a good yield as part of the investment case. Yeah, well, I tend not to think in calendar year terms, but I think in the medium term we see good opportunities in the market. I can find very many companies, not in every sector, but in most sectors, we can find companies, good businesses that are attractively valued with a decent dividend yield that we think will deliver good returns for shareholders. So yeah, we're pretty optimistic.